For more, let's bring in Yusuf Giriani, Director of Investments and Operations at IHT Wealth Management, joining us from Chicago. Very good evening to you, Yusuf. So, PacWest become the latest troubled bank in focus. How do you think the evolving situation in the regional banking sector will affect market sentiment?
So it's frustrating, I think, for a lot of investors to see this keep coming up into the headlines, right? The big banks who were really bad operators, they've already passed. First Republic, Silicon Valley Bank, they had very unique issues, and they were shut down. Right? First Republic, even though it wasn't shut down until 2 weeks ago now, they died in the 2 days in March after Silicon Valley passed. They lost $100 billion of deposits, and you can't come back from that. It's just really, really hard. On the other hand, most of these regional banks have reported 5, 10, maybe 15% deposit declines. Uninsured deposit ratios are much, much smaller. Insured deposit ratios are much higher. Most of them are playing defense, putting cash on their balance sheets. It doesn't mean that everything is great for these banks. They're going to have a hard time making profits in the future, perhaps. But some of the liquidity concerns right now strike us as potentially being a bit overblown, right? Now, that said, when you have a lot of instability in the headlines, right, when you have a lot of people who are concerned and it's all over the news, that can become self-fulfilling. So that's something we're very, very concerned about.
Mm-hmm. In the meantime, talking about insecurity and those concerns, we're also seeing rising concerns on the cooling job market and its link to perhaps recession. So what's your take on this? Will this, strengthen fears in the market and add more volatility?
So, yes, to your point, we transitioned from being concerned around rate hikes to being concerned about a potential recession and what that's going to look like. At this point, a recession is almost certain. We believe it's going to happen. The question is, what will the magnitude be of that recession? Will it be a hard landing or a soft landing? At this juncture, we think that there's probably enough consumer strength and enough strength in the job market, potentially, structural constraints around labor, such that we will have a soft landing. However, if this bank turmoil does not get under control, we see banks seize up, and we start to see this turn into more of a financial crisis, which, by the way, is not our baseline assumption. It should not happen. But if that is what happens, then that's your path to having a worse recession. Okay. But for the time being, we're still optimistic. They're going to figure something out with the debt ceiling. They're going to figure out, the banks are going to be okay. American consumers still out there spending, and we can get through the recession, and we can continue moving forward, right?
Mm-hmm. So amid those uncertainties and concerns, what are the sectors worth looking at for investors? So
recently, tech's gotten a bit of a bid. It's gotten a bounce. The rationale for that makes a lot of sense to us. They're exceptionally cash flow positive. They've got great balance sheets. They're not carrying a lot of debt. And up until now, tech has never been challenged to really rein in their spending and to show that they can have great margins. That's never been the pressure that they've been under, okay? However, now that's what the market's asking for. And I think it's crazy if you're going to bet against these great management teams who have managed to grow their businesses 10, 20, 30% a year for a decade. Why would you bet against that management team and say that they can't manage margins and boost that bottom line? I think that's crazy. I think tech is a great place to be, okay? And then on the other hand, fixed income, we could talk about it for a day. There's just so much more yield. There's so much more coupon available to investors. If you're looking for fixed income, you're looking for that steady kind of income stream and return stream, we can have that conversation now. For the last 5 years, we couldn't talk about it. But now we can. And it feels great to have some of that back on the table and to give investors just more options to try to achieve the return profiles that they're looking for.
Mm-hmm. And Yusuf, how about energy stocks? Because we are seeing that oil prices falling overnight again.
Energy stocks, I mean, look, I think there's a lot of fear right now for people saying that energy is going to tumble. Oil prices are going to go down in a global recession. But look, emerging markets have come back. They're already starting to cut rates. China's economy is opening up a bit. the United States is not at this juncture set for a hard landing. I think it's pretty premature for people to say that energy is going to face severe, a falling demand. And as such, if Brent is going to stay pretty stable, if WTI is going to stay pretty stable, oil companies are very cash flow positive with Brent and WTI around the current prices, and anything higher from here is just extra on top. Plus, beyond that, the oil companies are being much more disciplined in how they start new projects and with their cash flows, and they're giving more of that money back to investors. So it maybe don't expect the big rip from energy like what we saw last year, but people who are saying that, they're going to go into a period where they're going to struggle, it might be, again, a little premature to say that they're really going to have a hard time when they're this cash flow positive. There's a lot you can do when you've got that much money coming in every day.
All right, Yusuf, thank you so much for your analysis. Yusuf Gariani, Director of Investments and Operations with IHT Wealth Management. Well, Twitter CEO Elon Musk says he has found